Good morning, it's Wednesday the 13th. I'm FX Blue and this is the market brief. So Sunak's been on again with a nod to how long the government fears this COVID-19 will be a problem. He announced that furlough payments would now be extended until the end of October. Employers will need to contribute to the payments from August, but this aims to allow flexibility for phase 2 and should help control the spread as lockdown is lifted. Of course, the original scheme covered 80% up to £2,500. That was budgeted at £38 billion. It's apparently helped about 25% of the UK workforce. And according to Sunak, of course, it saved many jobs. But economists felt that the costs were beginning to look unsustainable the longer the scheme needs to be extended. Top of the pops for the data today, Q1 GDP showed the economy contracted by 2% between January and March this year. But of course, as we've seen in the US and the Eurozone, Q1 data has only been really taken as a leading indicator for Q2, which of course is expected to be much worse. But fear not if you're a bad news fan. Current expectation is for about 14% contraction for the year. Doom and gloom. Sterling tested recent lows around 122.65 against the dollar, but fell a little further against the euro to 113.05. Over in the US, it's up to about 1.25 million infections and 80,000 deaths. Anthony Fauci, the head honcho of infectious diseases, he's been on to warn that the second spike in autumn is possible even before the first wave is under control. He also voiced concerns about Trump's gung-ho attitude to restarting the economy. So we'll have to see how long he stays in a job. The latest election polls put Biden at 46% and dear old Donald has slipped to 43%. So maybe he'll take heed and start to show a more presidential leadership. He certainly needs to do something different because the expected plan to campaign on a foundational platform of economic strength, that's certainly looking a little shaky right now. The markets remain in a bit of a state of flux driven by risk appetite. Talk of the second spike dominates the news, and new cases in ground zero over in Wuhan are beginning to rise again. There are even rumours about a potential liquidity crisis in the summer, which could cause another flash crash. We'll have to see about that one, though. It might just have been a quiet day on the trading floors. But yesterday we saw euro dollar touch a high of 108.85 on an otherwise relatively quiet day. Have a good one today. Any questions? Pop them in the comments below. Otherwise, I'll be back again tomorrow. I'll see you then.
If you do not have a clue, then just tweet through and ask FX Blue.